Good day, guys. Good day, everyone. It's your guy, Figolowa from Farm Trading Network, and we're here again dropping another banger, another video, another awesome video on YouTube today. And this video, I'm going to be teaching something wonderful. I'm going to be teaching something sweet. So, you guys observe that it has been so long I've dropped a YouTube video. It has really been so long. I've been really facing some real life challenges actually, and by God's grace, I'm getting to just put myself together and all those things. So, um, today I'll be today I'll be talking on a interesting topic. I actually promised the students, the guys in the free group, about this particular topic, and it's called flip zone strategy. The flip zone strategy, how you can trade the market using the flip zone strategy. Now, mind you, this particular strategy is a new wave right now in the forex market, right? It is a new wave right now in the forex market. Like all those strategies we'll be using, support and resistance, trend line, SMC, ICT, they are all good strategies. But you see this one, this is a new wave and it is really, really effective. I tell you guys, it's really, really effective. Now, before we continue, make sure you smash the like button on this particular um, video, and also make sure you subscribe, turn on the notification bell so that you can always get updated whenever we drop new videos like this. So just stay updated, stay tuned, because we're going to be dropping good videos from now on. You understand? Videos that's going to add to your forex trading career, and also going to add to your normal life, build you up in every area of life. You understand? So let's get into the video for today. So, like I said, I'll be talking about a particular strategy, though this strategy is not yet popular, right? Not most traders right now, most retail traders don't know about the strategy. It's it's a strategy that happens every day in the market, but most of us don't know about it. You understand? It is, man, a very cool and good strategy that every trader needs to understand this particular strategy and make use of it. Yes, and if you want to really succeed in uh this trading space, like I said, other strategies are effective, but this particular one is a new wave in the forex industry, and it is called flip zones. Now, what are basically flip zones? Flip zones are just points in the chart whereby the market has taken out the opposite party. Then you will use the opportunity as a trader, as a flip zone trader, to make profit in the market. So, for example, the market takes out the buyers. Now the market has taken out the buyer. You as a flip zone trader, you use the opportunity to what? To join the sellers in the market. That is how it is. Now, mind you, the market, this is how it works. The market, before the market moves or gives a major move either to the upside or to the downside, there must be liquidity. Liquidity must take out, some traders must be taken out first before the market moves in a specific direction. And the traders that have been taken out are the buyers and also the sellers. Those are the traders that must be taken out first before the market buys or before the market sells. Either way, if the market want to buy or the market want to sell, those two parties of traders must be taken out first before the market sells or buys. I'll be showing you guys what I mean on the chart right here. You understand how to trade this particular strategy, you understand, which is flip zone strategy, and how to make use of it in the forex market, how to make use of it to make good profits for yourself. You understand? So this strategy is really, really wonderful, sincerely speaking. And one thing about it is you can trade it on any time frame. If you are a swing trader, you can trade it on the daily time frame and even on the 4 hours time frame. You can also trade it on the 1 hour time frame or the 30 minutes time frame. If you're an intraday trader, you can trade it on the 15 minutes time frame or 5 minutes time frame. If you're a day trader, you can, or a scalper, you can trade it on the 15 minutes time frame, 5 minutes time frame, or even on the 1 minute time frame. Like, it is super crazy, right? So now let's get into what we have today. But before we move on, shout out to King Soul's FX. King Soul's FX. I pray he sees this video. Is like is the father, one of the fathers of this particular strategy, the person who I learned this particular strategy from. Yes, I do. I don't know him in person, but he has been a mentor for me. Um, through the online space. So let's get into the video for today. So now, like I said, flip zones are strategies whereby you wait for the parties, the opposite party to be taken out first before you enter, right? Now, mind you, the market will always take out liquidity. That is what moves the market. Liquidity is what moves the market. If you're a day trader, you need to understand the concept of liquidity. It is very, very important. Like liquidity every single day, liquidity must occur for money to be made, right? People must be liquidated, people must be taken out, traders must be taken out, money must be taken out, people must be sacrificed before the market moves in a certain direction. Traders must be sacrificed before the market moves in a certain direction. And this particular strategy flip zone fits in into this particular category, right? So now, for example, this is I'm going to just show a a diagram describing this particular strategy for you so that you can understand it. So we'll come from the aspect of the bearish market all the way to the bullish market. So this is an example of the bearish market. So for example, if you are looking to sell using a flip zone strategy, the first thing you want to see is you want to see the buyers being taken out. You understand? Because for sellers to prevail in the market, the buyers must be taken out, and even also the sellers also must be taken out. So I will show you what I mean by all these things. So now look at it. This is a buying market. Just follow me. Uh-huh. So now look at this. Just follow me. This is a buying market. The market broke structure all the way to the upside, right? So there was a break of structure to the upside right at this particular level, right? Yeah. So market broke structure to the upside. So this is a break of structure to the upside. Now, what will most traders want to do at this particular point is most traders at this particular point, they will definitely want to what they want to buy from here. The SMC traders will also want to buy from here. ICT traders will also want to buy from here, right? So I'm actually correct because most of the traders who are using most of the popular strategies right now, we also want to buy from here. The trendline traders too also want to buy from here. So you can see how many people that are buying from this exact particular zone, right? So there are a lot of traders that are interested in the buy from this particular area. So what to come to your mind is people will definitely be looking to what to buy from here. So as a flip zone trader, what do? You have to think against the crowd. Like you have to go against the crowd. Do not follow the crowd. Whenever it comes to trading, whenever it comes to anything in this life, do not follow the crowd. The crowd might be going in this direction, but why don't you try the other direction? Because that other direction, that is where the freedom is. That is where the main thing is. That is where the main stuff, the main gold, that's where it's lying at. You understand? So look at it. So many people are looking to buy at this particular area, right? Look at, just follow me. So many people are looking to buy at this particular area. Now, what happened is because of most traders are looking to buy at this particular area, mostly most retail traders, like most retail traders, mainly retail traders, are also looking to buy at this particular area, at this particular zone. So what the banks do is what the institutional traders do, those people who are trading with big funds, what they do is they know that this particular place is like there are so many traders who are focused on buying the market from this particular area. So what they do is they make this particular place a trap. They make it as a trap. They use it as a trap to trap most traders into buying from this particular area. So what do you do as a normal trader who you've been taught the ICT model, the SMC model, S support and resistance model, trend line model, different model. I don't care. You understand? What will you do? You want to buy from here, right? So this is what the banks will actually do. It's as simple as ABC. So what they do is they deceive them, right? They because mind you, this is the goal of every institutional traders, right? They are looking to make money in the market. So definitely they want to buy from here a little bit to make a little bit of money before they do the main stuff, which is sell, right? So what they do is they deceive traders to buy. Most traders are looking to buy it. So as soon as the price gets here, you'll see the reaction. You will definitely see the reaction from you will definitely see the reaction from where you are, right? From your chart. Your chart will always show you what you need to see. The chart will always show you the candlesticks in your chart will always show you what you need to see. So that particular reaction there, they will definitely deceive the traders to what, to buy from here. So most retail traders, as soon as they come here, they start putting orders. They are buy orders, buy execution orders, they are buy pending orders resting here. So as soon as the market comes here, the market fill up those orders and start pushing all the way to the upside, right? So as the market start pushing all the way to the upside, what happen next is most traders will be in profit, right? Most buyers who are buying from here will definitely be in what? They will definitely be in profit. So, and remember, that is the agenda of the institutional traders. They want to deceive them to what? To go long. So most traders are already in profit here, and most of them would have closed their chart, they would have gone to do other things, they would have been so happy that they, yes, definitely the market is definitely going to eat their take profit. Now, where would their take profit be? Definitely a normal retail trader who trades SMC, ICT, and all those strategy, their take profit will be at the next high, right? Because definitely, if the market wants to definitely buy, it will definitely go and take out the previous high, right? That is how the market works. Everybody knows that. So most of them, their take profit will be at this particular level, right? So that is where their highs are. So they will place their take profit and they will go to they'll go and do other things, close the chat and go and do other things because they don't want to be emotionally attached to that particular trade. So what happened next? Because the banks, they know where they are placing their TP and they know that definitely so many traders are definitely going to buy from here. So they use this particular place as a trap. So what happened next? You see that the market just what happened next? You see the market, after the market gives them this reaction, remember you must see that reaction. You must see the reaction because if you do not see the reaction, it simply means that they were not no buyer was interested in this particular place. But when you see the reaction, you know that okay, definitely there are traders who are interested in this particular place. I'm not just interested, they are buying because whenever you see the market going all the way to the upside, somebody is buying. If you see the market going all the way to the downside, somebody is selling somewhere. You understand? So because you see the market going all the way to the upside, that means people are buying. And where will their stop loss be? Most of them, their stop loss will be at this particular low. Those of you are watching, you know what I mean, right? Most of them, their stop loss will be at this particular low, which is very, very, very interesting, right? So the banks, they know what they're doing. Then the next thing the banks do is what they put a lot of money into a sell trade from here, from this particular position, and they short the market all the way to the downside. So as soon as they short the market all the way to the downside, what happened next? What happened next is those traders who are buying from here, their stop loss gets taken out. Those traders who are buying from here and their stop loss are here, their stop loss gets taken out. Those traders who are buying and they put their stop loss in break even at their entry, their stop loss gets taken out. So different traders stop loss will definitely be taken out. So now you can see the buyers has now been taken out, right? The buyers has now been taken out, which is exactly what we're looking for. We're waiting for the buyers to be taken out before we start looking for what? Before we start looking for sell opportunity. Now, mind you, this particular stuff happens every single day. That's why you see you use all these strategies, but still you still keep on losing, right? And you're wondering what is the matter? I buy and it sells. I sell and it buys. That is how the market works. It wants you to think outside the box. It wants you to think differently from all that traders. So you can see after look at it, most traders are actually buying from here, and this is where their stop loss are, right? Their stop loss are lying at this particular place. So you wait for the market to take them out. You can see the market has now taken them out, right? So after the market take them out, this is where most of them their stop loss will be, and they would have been in a loss or their stop loss would have been smashed already. So after the market takes them out, we want to see the market also want to retrace into a particular POI before it starts selling because the real agenda here is what is to sell. So definitely the buyers have been taken out. So the real stuff, the real deal is for the market to now sell. So you wait for the market to come into your point of interest. Those of you who don't know what point of interest are areas in the chart whereby the big banks are also looking at those particular points. There are signatures in the chart showing that the market will always come back to those particular area, react to it, give you a lower time frame confirmation, before you enter into that particular trade. That's what exactly what I'm trying to say. Yes, sir. So now when the market gets into that particular area right there, right? When the market gets into that particular area, what you want to see is what you want to wait for that. What you want to wait for that. Sorry. So when the market, I'm coming lost. Okay. Now the market has taken out this buyers, right? Now it is now time for you to now start what for you to now start looking for sell opportunity. Why? Because the buyers has now been taken out. So the market does not have any business with the buyers again. Right. So after that, you want to look for your PY. So definitely in most of the cases in flip zone trading, we are always having 2 point of interest. Right. Even those SMC guys, you guys understand what I mean. We are always having 2 point of interest, and it's always confusing traders. Which of the point of interest will I use? Should I use this? Should I use A? Should I use B? For me, I love using the extreme point of interest. It is very, very convenient for me, right? I love using the extreme point of interest. Now, depending on the kind of trader you are, you can use the extreme, you can use this particular one here. You understand? Anyone is a choice. You can just what most traders do is they split the risks. For example, if they are looking to risk 1% of their trading account, they split the risk. If they are looking to risk 1% of that particular for that particular trade, they split the risks. They put the risks this one 0.5 and they put the risks this one 0.5. So they put a limit order and limit order here. You understand? But for me, I don't like doing that. I wait for the market to come into the extreme point, right? Into extreme point of interest. We have different point of interest, fair value gaps, and other blocks. Those are points of interest. So as soon as the market comes into that point of interest, that is where I'm looking to what? That's where I'm looking to sell from, right? So that will be a wonderful trade all the way to the downside. But mind you, before I sell, most of the time, I'm always, most of the time, if I'm looking to trade from the 1 minute time frame, the 1 minute time frame is really, really should be is something is not really strong like that. It's not a time frame that is very, very strong. So what I do most of the time is I want to see a confirmation, or what I call it, or what I tell my students is I want to see a reaction, right? No reaction and there's no entry. If there's no reaction, then there's no entry. So this is the reaction I want to see. I want to see the market break structure to the downside, right? On the lower time frame, which maybe on the 1 minute time frame or on the 30 seconds time frame, any time frame you want to use. You understand? So I want to see that particular break of structure to the downside. So as soon as I see that break of structure to the downside, I enter my trade, and that will be a nice trade all the way to the downside. Depending on how you take your profit, you can take your profit using. For me, I love using RR. I love using a 1 to 5 RR, or at least sometimes 1 to 5 RR. That will be my first TP. When I get that, I close some positions, and then I need the rest to run to profit, to more profit, right? So that is it for the selling market. So now let me do the one for the buying market so that we can all have a clearer picture. You understand? So for the buying market, you want to see the market take out the sellers. So in this particular, let's go back to the selling market. Now, this particular case, you can see for this particular first place, the market took out the buyers right here, right? So the market took out the buyers. Now, the second place whereby the market will take out the other part of traders, the sellers, is this particular area right here. You can see this is a liquidity point. This is what I call an inducement. That is why I love using the extreme point of interest. So this is an inducement here. The market took out this inducement, took out all the sellers, because there are definitely people who are selling from this particular area. So the market took them out. It is going to come into this extreme POI, point of interest, before it gets all the way to the downside. So now let's look for that of buying market. So for the buying market, you want to first see the market sell first. You understand? You want to see the market take out the sellers first before you start looking for any opportunity. So all you just need to do is fold your hands and just search on your chart, and definitely you're going to see. Yes, and so this is it. You can see the market is going all the way to the downside. So what is this? This is the what a break of structure. This is a break of structure to the downside. I see that. So this is a break of structure to the downside. So now the market has finally broken structure to the downside. What happened next is most people, most traders, most SMC traders and ICT traders. This is reality. Like this thing, this stuff I'm saying really happens. Like it happens, right? Most traders want to sell from here, right? Because this is a selling market. So most traders want to sell from this So let me take another shit. Most players want to sell from this particular area. It is normal, right? It is normal. It happens every single time in the market, every single time, every single day in the market. So most traders want to sell from here. And what happens? The banks will always want to give them that particular trap. We always want to trap them by deceiving them that yes, the market is definitely going in their direction. So what happens next? You can see the market will just come and what the market will just come, give them a little bit of reaction, which is the sellers, give the sellers a little bit of reaction that definitely the market is really supporting this particular trade. So the sellers should take the trade from here because the market is already moving in that direction, candlestick, everything plays out, and put their take profit at this particular low. But what happened next? You can see what happened next. The market goes down in profit for them, which is the sellers. And what happened next? You can see the market just come and boom, take them out, take out all their stop loss. So right now, right about now, the market has taken out the sellers, right? The sellers has now been evicted from this particular trade. So now it's mainly the buyers. So for the buyers, we want to see the market go into the extreme position for um for activating your, you want the market to come into your extreme point of interest or your extreme area of value before you start looking for trade opportunity, because this particular area here, this is just an inducement to go long from here, right? What I mean by inducement is just like a deceiver, right? It is deceiving you that what this particular place is going to give you more growth, it's going to give you everything that you need. But no, that is not it, because this place is an inducement and this is where they're going to take out buyers, because right up right below this particular level here, people are definitely buying from here and the stop loss are just below this particular level. So you can see that when you see a you just see that long candle, that when you see some market, you just see that long candle will just go all the way from the upside into a particular point of interest. You add to it on the lower time frame, and boom, you see that speed all the way to the upside. So it took out the sellers right there, went all the way to the upside, deceiving the buyers. So people are buying here, taking it has taken out the buyers right here. And what happened next? We want to see that reaction. We want to see that reaction on the lower time frame. Now, mind you, your lower time frame might differ. You understand? I'm not imposing any time frame on you. So depending on the kind of trader you are, you understand? If you're a swing trader, you can use this particular strategy on the 4 hours time frame and make good money for yourself. You understand? So you can see this is a break of structure to the upside, and that is where you enter right here. You enter just at this particular level. You understand? So that's how you trade the flip zone, right? That is how you trade the flip zone. So now let me give you a live example of what I mean by this particular concept called flip zone. So you can see this is the 3rd of August 2023. You can see the market broke structure to the downside on the 1 minute time frame, right? So this is a 1 minute time frame, and the market broke structure to the downside. So you can see the market broke structure to the downside. Now, most traders, what happened at this particular point? Most traders in their head, they know that the market, they think that the market is definitely going to what? It's definitely going to buy. Sorry, it's definitely going to sell. It's definitely going to sell in their direction, and that's when most of them will start making that mistake of entering a sell position. So you can look at it. Look at it. The candlesticks are always showing us what we need to see. You can see it boldly here. You can see the market got to this particular area of value, gave that reaction all the way to the downside. But what happened next? You can see the market was not able to what to take out this particular low. This is the major low, right? The market was not able to take out this particular low because most of their TP will be at this particular low. So what happened next? Market comes again, taps into this particular zone, and what and still bounce off this particular zone. So what it simply means is what should come to your mind is this is a trap, right? So what you're waiting for is you're waiting for this particular air to be taken out for you to just conclude that yes, definitely this is a particular huge trap. So you can see market comes and takes out the air. And what happened next? You can see market has taken out the in this particular case, you can see the market has taken out the sellers in this particular case. So the sellers have been taken out already. Now, the next thing you want to do is what? You want to look for your point of interest, right? You want to look for your point of interest. So for me, I love using the extreme point of interest. So now I can see a nice candle right there, nice FE candle. So the market comes into that FE candle. Remember what I said? I said I'm always looking for what? I'm always looking for a confirmation. What you just need to do is just take this thing and print it here. Yes, I want to look for that confirmation. Look at it. This is exactly what we are doing. We want to look for this particular stuff right at this particular area here. And what happened? You can see the market did not give us that particular area. You understand right there? That particular structure right at this particular area. You understand? So this is where we're looking to buy from, right? And if you go down to your lower time frame, maybe the 1 minute or the 30 seconds time frame, you can always look for a reaction to confirm your trade, to confirm if the trade is definitely going to go in your direction. So in this particular case, there was no reaction, and um, there was no reaction. And if there's no reaction, then that means there is no trade opportunity. Remember the rule: no reaction, no entry, no reaction, no entry. So that is the first one, and we're lucky we didn't. We're patient enough to wait and see everything to ensure that yes, everything is going fine. So definitely that particular one went all the way well, went well to the upside. Right? So okay, so now let's keep going. Okay, so now we can see the market just keeps on pushing all the way to the downside. Look at this particular point, the market broke structure to the upside, tried to do exactly what we did in the first one, but there was no reaction all the way to the upside. So that is not enough to confirm if definitely the market is going to go in that specific direction. So now let's check this particular one out. You can see that the market gave a break of structure to the downside right here. Look at this, market gave a break of structure. So there's a break of structure to the downside. Now what this means is what people are selling, right? Traders are selling at these particular areas, or what it simply means, even though it does not tell you physically that traders are selling, or you do not see the word, it will show you using candlestick, right? That traders are selling. You will see the candlestick. Candlesticks are their signatures in the chart. They show you everything you need to see. You understand? You don't need to stress yourself any longer, because the invention of candlesticks is now, right? It will show you everything that you need to see about the the candlestick will show you everything you need to see about the market at a particular period of time. So in this particular case, this is where we mark out our POI. And what happened next? We observe that the market came into our zone and gave us that reaction that we are always looking for. So the market gave us that reaction that we're looking for. So the market came to our zone. Look at the reaction. Look at this huge rejection candle. Look at this bearish candle. Look at this bearish candle. So those are our reaction. Those are the sellers' reaction. So the market has given us the reaction already. That definitely there are people who were selling at this particular area. So as soon as the market eventually broke, eventually break structure to the upside, as soon as the market eventually broke structure to the upside, okay. As soon as the market eventually broke structure to the upside, the next thing I want to do is what? The next thing I want to do is very, very simple. I want to identify my point of interest where I should be looking to what? To buy from, right? So the market has taken out the sellers, so definitely I want to start looking for where to buy from. Right? I want to start looking for the good customer, the good areas to buy from, you understand, so that I can leverage on that and make good profits for myself. Okay, so this is the most extreme area in this particular swing, right? So, like I said, like I told you guys, I said I love using extreme order blocks or extreme fair value gap. So understand? So this is a fair value gap and this is an extreme fair value gap. So the next thing you want to do is what? You want to check, you want to see everything, you want to see that reaction, right? And that reaction is a break of structure to the upside, right? You want to see that reaction. So you can see the market, I've already marked it out already. The market came here, cleared out this particular low. After clearing out that particular low, we can see the next thing the market did was what? After clearing out that particular low, the market quickly broke structure to the upside right there. Quickly broke structure to the upside right there. So the market broke structure to the upside. After the market broke structure to the upside, where will you enter? That will really be a nice entry for you. Okay, For me, this will just enter. For me, give me a minute. Okay. For me, I will just enter around here. Yes, and my stop loss will just be at the low right there, at the bottom low right there, at the bottom low right there. My stop loss will just be at this particular low right there. So you can see it. That's a that's a good trade all the way to the upside, right? That's a good trade all the way to the upside, and you can just simply target this particular eye right there. That would be a nice trade all the way to the upside. Or next thing you want to do is what you want to up most of the time. Most of the time, what I advise you is go down to your higher time frame, which is maybe the 5 minutes time frame, to look for areas where you know that okay, this every time I see the market will always go back to these areas to come and fill it up. So you can see while scrolling, I saw that the market gave a gap, not just a favorable gap, a market gap, and I knew that the market is definitely connected all the way to the upside. But mind you, you need to always be at alert. You understand? You need to always be at alert. Whenever the market gives you some profit, or whenever the market takes out a particular major high, for example, like this particular high, what should you in this particular case is either you take your profit, your risk to break even, or you take some partials, you partial out, and you leave the rest to to go all into profit. So most of the time, what I do is I'll partial out and then I'll take my SL to break even. That's to entry. I'll leave it to smash TP. You understand? That way, rest assured that even though the market comes and goes against me after the end of the day, I will still be in good. Even the market comes and take me out after the end of the day, I know that I will still be in what I'll still be in a good profit. You understand? So um so that's it. You can see these are targets and boom, all the way to the upside right there. TP smash. That is the power of flip zone. Flip zone is really really powerful. That anyone, anytime, anywhere you can apply this particular strategy. You can apply it this particular flip zone strategy and make money for yourself, right? You can apply it anytime, anywhere in the world, and uh, to definitely pay off. Yes, and so I'm just using the 1 minute time frame. Most of the days, what I do is most of the time is I go down to most of the time I go down to the 5 minutes time frame to actually look for entries, right? To actually look for actually look for flip zones, right? But today I'm just looking through the how many times I'm looking for examples to show you exactly what I mean. Exactly what I mean by flip zone. I want to explain this particular concept to you guys very well so that you can understand this particular concept very well. So, okay, look at another example here. This is another example. This is an example for the selling market. For the selling market upcoming. Let me just show you guys. Okay, so this is a good example right here. You can see the market broke structure to the upside right here. This was on Sunday. So it works anything, any day, right? It works any day, right? But most of the time, it's better for you to trade during when there's so much liquidity, mostly London session and New York session. That way, you have more confidence and you won't really waste time on a particular trade for long. You understand? So you can see this is where most traders will be looking to buy. So this concept is very very simple. Look for that break of structure. Look for that break of structure to the upside to the downside. Then go against it. It is very very easy. Yes, and very very easy. It is simply what you've been doing already. You've been doing it already, so you can easily spot all these points out all by yourself easily. Yes, and without stress. So you can see now most traders will be looking to what they will definitely be looking to buy from this particular area. So what you do is what you want to see that reaction as soon as the market gets into that particular area. So this is where let me mark it out. Come on. Let me mark it out. Give me a minute. Okay. Now this is where the area is. Okay. This is where it is now. Most traders are definitely going to come into this area and give um, and most are going to come into this area and give a reaction to the upside. So you can see the market come all the way with this mighty speed. Look at the momentum, but the market was not able to break structure to the downside, right? It was not able to break structure. It was not able to. Sorry, it was not able to break structure to the downside. And why did it not break structure to the downside? Because there are so many orders at this particular level, so many opposite orders, which is the buying orders at this particular box, right? But the buying orders are not institutional orders. Get it clear. There's difference between buying order, retail buying orders, and institutional buying orders, right? When it's an institutional buying order, it comes, stops, and leave. Like it comes, stops, and leave, break structure to the upside and start going all the way to the upside. But if you look at this, look at the way market broke structure to the upside, came here and slowed down. Look at the speed. Just always observe candle by candle. Always check it out. Candle by candle. Look at the speed the market used to break this market. The market used to push all the way to the downside. So look at the speed. You need to ask yourself the question why the market gave that amount of speed. So you can see after the market got to that particular area, what do we see next? You can see this reaction, this little bit of reaction here, to reacting that yes, definitely there are buyers at this particular area. So as soon as you see this reaction, you want to set your stop loss, you want to set so as soon as you see this reaction, you need to set your line because you know that definitely people are definitely going to be looking to what to sell to buy from this particular area. So this is a line, this is a trap for them that definitely the market is going to come here and what and take out their stop loss. So after look at the reaction all the way to the upside. So the reaction has been seen already deceiving the buyers. Look at it, break of structure to the upside, deceive that's deceived the buyer already. You can see market comes into the POI of the break of structure and what gave that reaction, um, gave that market broke structure, came into a POI, gave the reaction, showing traders that it is time to what to up into a what into a buy. And what happened next? You can see the market just kept on dancing around and took out their stop loss. So after this particular stuff happened, you definitely want to look for areas in the you definitely want to look for coming. So break of structure to the downside, market took out this particular low. After market took out this low, market broke structure to the downside and what came back to give us that reaction that we need, right? So market took out this low, um, which is this particular low. Market took it out, taking out all the sellers, and look at that. Like I said, I love using the extreme point of interest. Now, I'm not trying to impose a particular law on everybody. If you want to use the extreme, use the extreme. If you don't want to use the extreme, if you don't like it, then you can switch to you can if you don't like the extreme, you can switch to the second POI before you get to the extreme. You understand? But for me, I love using the extreme POI because that way that way I'll have more confidence in that trade that when it gets to my direction, definitely the markets when it gets to excuse me, so that way I'll be so confident that when it gets to my point of interest, it's definitely going to go in my direction. Yes, and so as simple as that. There are so many examples on this particular concept. So many examples, mighty examples on this particular concept. Like being able to catch so many trades using this particular concept. So if you check this particular one out too, you'll see that something like that is happening. You can see, look at this particular stuff, look at all these areas here, they are reaction. So market broke straight to the downside, you buy from here and what start making, look at it, it's as simple as that. You understand? It's as simple as that. So coming, trying to look for more examples. I'm trying to look for more examples. Oh my god. Okay, so there are so many examples out there that you can always use as an example to today we're able to catch more than 100 pips on US or using this particular strategy, which is 22nd of August 2023, right? So we're able to use the cash mighty moves all the way to the upside or to the downside. You understand? So the benefit of this particular strategy is it helps you to filter out trades that will not go in your direction. Like you'll be able to see it, and when you see it, you'll be more confident that yes, definitely this particular stuff is working out very well. I don't want to make this video to be too long. I just want to just explain this particular concept of flip zones. You understand? So if you don't really understand it, always you can always come into my you can just comment on this particular video which part you don't understand, and you also comment if you want me to be dropping very powerful stuffs like this. There's some very powerful stuffs like this every time on YouTube. Just let me know in the comment section. Make sure you subscribe to my YouTube channel. You understand? Make sure you subscribe to my YouTube channel. Give me a like. Always give me a like my video. You understand? You understand? So that and that's it. Okay, so if there's any question, let me know. If there's any question, let me know. That's everything you need to know about flip zone. Flip zone is not a it's not a complex strategy, man. It's not a, if I'm here all day, I will just take a look at this particular strategy, check it out. It's not complex. It's not complex. Number one, you can you can trade it on any time frame. You can trade it on any time. Like for me, I trade on the 5 minutes time frame. Then I go down to the 1 minute time frame to look for confirmation. Most of the time, I trade on 1 minute time frame. On um, most of the time, I trade on the 1 minute time frame. Most of the time, I trade on the 5 minutes or the 15 minute time frame. So any of the time frame is suitable for it. Any of the time frame is suitable for it. So it's called the flip zone strategy. And shout out again to King Soul Events for giving us this opportunity. You understand? Shout out to him. Shout out to him. So before we go, please don't forget to subscribe if you've not subscribed yet, and please don't forget to like this video, and also you can also share this particular video also to other traders. Understand? Because it definitely benefits others too. You understand? So let me know in the comment section if you're able to grab one or two things. You understand? One or two things of value, and I'll post my link to my free Telegram channel if you are ready to join the Telegram channel. So okay, um, the link will be posted in the description. That for anybody who's ready, just go and click the link to get added. Thank you very much, guys. Thank you very much.